Hey everyone, Coach Investor back with a new video for today. So as I mentioned in the last video where I talked about a couple of positions that I've added to my portfolio, talked about Nu, and now we're going to go over their latest earnings report, touch on the highlights, let's say, share my thoughts on the company and the current situation maybe in Latin America, more specifically in Brazil as well with regards to credit, but also with regards to maybe the political situation there and how that could affect a company like Nu. So if you're interested in that, hit that thumbs up button, subscribe if you have not, and if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So Nu stock, it's down around 55% year to date, and since the last time I've covered it, I believe it was end of August, it's basically flat. But we do have some new information with regards to the company, such as, well, the Q3 results. So they went from 65.3 million customers to now over 70 million customers. That's up 46% year over year, 39% of adult population of Brazil, and an 82% monthly activity rate. Now, Nu obviously offers various services. Now they break it down here a little bit for us. So the first one is Nu, so the active customers, that's around 57 million, that's up 63% year over year. Active accounts is up 68% year over year. Then we have active credit card customers that now reach 31.8 million. Nu Invest active customers 6.2, nice triple digit increase here. Active personal loan customers up 279% year over year. Active SME accounts up 117% year over year. Now Nu crypto actives, that might slow down in the coming quarters because of, well, the current situation in the cryptocurrency market. And active insurance policy, that's up 101%, well, still under 1 million. Now, when it comes to the exposure that Nu gives you, it's not just Brazil, as you can see here. It's Brazil, Mexico, Colombia. As you can see, Colombia has been growing extremely fast. Now, overall, their markets is around 60% of Latin America's GDP and population. And I believe they're probably going to grow in other countries as well, just a matter of when. A bit of the same with Mercado Libre, also in huge markets in Latin America. That's also one of my largest positions. Now that's all nice and good, but what actually happens with the new customers? Do they adopt more products than before? Are they more active than before? Well, we get this type of graph. If you're familiar with Fiverr's earnings report, you're probably familiar with this as well. So the active customers using Nu accounts as their primarily banking account, as you can see, has grown quite nicely. The darker ones are the most recent ones. Same with number of products per active accounts, same story here. And monthly average revenue per active customers by quarterly cohort in US dollars and FX neutral, you can see it's going to surpass the past cohorts as well. And you can see this visually as well here. Average revenue per active customer, that's up 61%. Revenue is up 171% to $1.3 billion. Also beat the consensus by a little bit. I believe it was 1.23 or something like that. So that's nice to see. Now, when it comes to deposits, that has been growing as well. And now if you're asking yourself, what does CDI mean? When you look at the 98% here in Q2 and now it's down to 95%. So that's cost of funding as percentage of CDI. And they mention here below, CDI stands for the Brazilian Interbank Deposit Rate. Now they say here that despite money boxes ramp up, as you can see here on the right, deposits have been growing quite nicely, and while funding cost gradually declines. Now, when it comes to net interest income, which is the purple number, and net interest margin, which is this pinkish orange number, that continues to expand as loans outpace deposit and funding cost is optimized. Now, I do want to mention something with regards to the risk, and that's because of the credit cycle. Could be a long and a bad credit cycle in Brazil. Really, it's just a matter of time will tell. So that's a risk you have to take into consideration. You can look at other banks in Brazil as well and their results and then form your opinion on that. Also, the current situation with regards to, well, the new president, etc., could also pose some risks with regards to Nu and how that should operate, etc. But for now, just things to keep in mind. The long term shouldn't really hurt your investment thesis. And as for gross profit and gross profit margin, has been growing as well. We're now at $427 million in gross profit. Gross profit margin is now at 33%. That's up from 31%, but of course, we've seen it higher before. And if we look at adjusted net income and just net income, we can see here that it is positive, not by much, but it's still positive, $7.8 million. And adjusted net income is at 63.1, huge jump quarter over quarter. Let's see if that's sustainable. But it is already a good sign to see net income being positive, not adjusted, purely net income. And then to sum it all up, and these are pretty impressive numbers. So the cost to acquire a customer is at $6 here, $2 is paid marketing, cost to serve is at $0.8, monthly average per active customers, 85% lower than incumbents. We've seen that with Cash App as well. When it comes to cost to acquire, cost of risk, 4.7% consumer finance delinquency rate. It's around 30% lower than Brazilian industry. Again, it's still a risk. It's lower than the industry, fine, but it's still a risk to take into consideration. And then cost of funding, $14 billion in deposits, 91% of CDI. And with what I said with regards to credit and the credit risk, credit cycle, well, it basically shows it here. Delinquency continued to increase following macro trend. You can see it right here. Again, it's something to take into consideration. I don't know how long this will last, but hey, this is the situation right now. And for those that are not familiar with the term, NPL is basically non-performing loans. 90 plus days or 15 to 90. Now they are showing us here that they are tackling this risk with the risk-adjusted NIM. NIM is net interest margin improvement, shows that Nu is adequately pricing for credit risk. As you can see basically here on this chart, it's nice to see, but again, it is a risk. So wrapping up, profitability, high growth and profitability, revenues up 171% on an FX neutral basis year over year, net income of $7.8 million, NPS, best in class UX, 2 times NPS versus the industry across all markets, which means, well, the customers like it and trust it. And thirdly, market leader in Latin America, number 1 card issuer and the 6th largest player. So really, I've got nothing bad to say about Nu besides, well, the factors that you do have to take into consideration right now. Now, I do want to say that because the stock is down 55% year to date, because the company is still growing extremely fast, that does not automatically make it extremely cheap. No, if you look at the valuation metrics, it's still at a premium. But as we've said with Shopify, the market decides to put it in the premium category, not the company itself. So it basically comes down to whether or not you would like to pay a premium right now. I have a small position in my portfolio, and since the price has not really changed that much, I'm not really going to add more right now. If it drops more, great, I'll pick up some more. If it goes up, then good, my position goes up as well, and I'll increase accordingly. Obviously, do share your thoughts down in the comments below with regards to Nu or maybe other Brazilian companies. Do let me know if you hold any down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.